All right. Good morning, everyone. My name is Saskia de Jong. I work for Avinode Group. I'm the Director of Sales of the Americas. For those of you who are not familiar with Avinode, we were the first company to move business aviation online. A move that historians might call disruption, which is flattering. We just see it as making technology available for the business aviation industry. I have the pleasure this morning to moderate this phenomenal panel. Thank you very much. We're going to discuss who needs to own charter and the sharing economy. As you all know, we live in a time where it is more important to have access to services and goods rather than owning. And this has been able to explode thanks to technology. I mean, look at Airbnb, Uber. I mean, we spoke about it this morning. We've heard about it a lot this morning already. So we will talk about a couple of topics this morning. We'll talk about owned versus managed, shared versus owned, technology, and how the industry, if there's any industry trends. So without further ado, let me go ahead and introduce you to our panel. So first, we have Andrew. Andrew Collins is the president of Sentient Jet. Andrew led Sentient's jet product management efforts and created their original web marketing strategy. As a VP of revenue management, he was responsible for adding a 50-person revenue-generating and acquisition team, and he has also helped lead, establish, or improve a number of prominent venture-backed technology enterprises. Welcome. Joe Barber. Joe Barber is the Director of Aircraft Management for Lacy Aviation, a privately owned operator with 105 managed aircraft. Joe's consultative and problem-solving approach allows him to identify how Lacy's suite of services can best support their flight operations. Joe began his career 10 years ago with an internship at an aircraft management and charter company, and has held prominent positions ever since. And he was recently awarded with MBAA's 40 Under 40 Award. So welcome, Joe, the millennial in the group. Stephanie, welcome, Stephanie. She's the president of JetSuite. Stephanie has worked in both commercial and business aviation, and she is a 30-year veteran. She's worked at FlexJet, SkyJet, and she's an award-winning executive coach, sales mentor, business advisor, using advanced neuroscience selling strategies. Am I pronouncing that all right? Perfect. And if that is not enough, she's also written several books. Fabian Bello is the CEO of Journey Aviation, an operator with a fleet of 14 managed Gulfstream. Fabian developed his extensive business skills working at an industry-leading global logistics company. And after entering the aviation, Fabian made his name managing the launch of Learjet's fleet into the Middle East and penetrating the international markets. Under Fabian's leadership, Journey has demonstrated a notable growth in their fleet and will exceed 100 million in revenue this year. Last but not least, James, welcome. James Henderson is the president commercial operations at XOJET, and in his role, James is responsible for driving business growth, client engagement, and the continued transformation of direct-to-client retail operations. James has extensive background and proven track record leading businesses that serve ultra-high net worth individuals. And prior to XOJET, he served as a president and CEO of America for Ferretti Group, a leading yacht manufacturer. All right, let's go and get started. So the question that I don't want to ask is how 2018 was, because we've already heard that. So rather than starting with that, I want to ask you, where do you see demand coming from? And where do you think the industry is going? James?
Yeah, we see a lot of demand coming out of a number of areas. I think generally in the industry we're seeing growth. We're seeing new people coming into private aviation significantly. We're seeing also a lot of trends in people moving out of fractional and ownership models into our model as well. So that's where we're seeing most of it. I mean, if you look at the growth of the ultra high net worth sector now, we're about 44,000 people in the US that have over 50 million. So the total addressable market that we have is tremendous.
Absolutely, great. Joe?
Thank you. So as a millennial, I'll do the semi-realistic and idealistic opinions on everything. So I'll corner that market. But I think for what we see demand coming is, we're seeing a lot of aircraft owners enter into the service. And, the first time aircraft owners, everyone's seen that. Don shared those same sentiments. So, it's about providing a service. That's what we provide for this industry. And, I think that everyone is being pressed to grow their company, grow their service and their values while maintaining the service for those customers. But not only to the new, I think we overemphasize the new customer. I think there's an existing customer that wants just that same increase in service as everyone else. So I see that being a big presence in the future.
Okay, great. Stephanie, how about you? Do you see any demand specifically in the supply as well?
Yeah, it's interesting because for us, we're kind of mirroring the same thing that my colleagues are saying up here. At the end of the day, what we're finding is, and I agree with you, there's the new market, but we're also finding our current customer base buying more and more and more. And so the way that our particular customer base is segmented in JetSuite is we've got about 50% of our clients that are big corporations, and then 50% that run perhaps smaller privately held organizations. And so to see them start buying 2 and 3 and 4 times more than they usually do, typically, I think is a sign of the times as well.
Okay, great. Now, Andrew, we know that Sentient is one of the leaders in jet cards, which is halfway between ownership and ad hoc charter. Where do you see the jet card is going?
That's a good question. We have 6,000 cardholders, and what I think we see is a lot of folks that are actually trading out of assets to get into more of an asset-light experience. So we've seen growth for 5 straight years. We also see a return of the blended flyer, right? The person that's using multiple solutions. That feels a little frothy to me, to be honest with you, but I think for us, as we move forward, the big thing is around service. We've seen the growth, but the way that we typically garner demand or where we see our largest acquisition is through referral, and I'd never want to give that up. So an investment in service, product enrichment, things like that are important. I think this is a growth market, or has been. I think a lot of people are sort of obsessive with growth, but I think that if you pull back 10,000 feet and think about what you have to do relative to propitiously aligning supply and things like that, service and certainly enrichment are important.
And I think he brings up a really good point, because nowadays it's rare that you would find, one size doesn't fit all, right, for anything. And so we're experiencing something very similar as Sentient is, which is a lot of the clients have a little bit of this and a little bit of that. So they may have a fractional share and a jet card. They may have, a fleet of aircraft and a jet card. They may, they just are doing almost like an a la carte, which is good. I think it's good for the industry in general, but it's certainly for those of us in this space, it's very beneficial for us.
Great.
We're seeing exactly the same thing. We're seeing a lot of people who have different approaches, and I think the trend is that clients are becoming just much more sophisticated. So they're looking at, traditionally people would look at fractional ownership as kind of the go-to, and that was where we saw really the demand. And now what we're seeing is people looking at jet cards, they're looking at shuttle programs, they're looking at charter programs, they're looking at branded charter fleets, and they're figuring out what the profile of their flying is going to look like and where they can optimize that and where they can really save and get the best value. So we're seeing exactly the same things you guys are.
We actually have a question for the audience as well. So looking at owning or sharing, where do you see that the increase will be over the next 12 to 24 months? Is that going to be a fully owned, fractional, jet card, charter, or seat sharing? And I wanted to do this through the app, so let's see. Is it up? Perfect. So please go ahead and answer that question for me. And then Fabian, I have the same question for you. Where do you see?
I think it's going to be a kind of a mix of everything. In our industry, I always feel like it's a perfect ecosystem where it's never going to be too much of one thing. There's always some sort of that balance. For us, I'm actually sitting on stage with all of our clients, and whether it's a jet card or whatever it is, our job is to provide the lift as a charter management company. So the jet card business I find very interesting, because I think that clientele is not so necessarily price-driven because they've already done the sale, they've already gotten the hours. And it's a different experience for us booking a client that has a jet card versus someone that's doing the ad hoc. They want the lowest price, and it's almost like the quality may not be a requirement because they're looking strictly on price. So it does make the experience a little bit different. So for me, it's a mix of everything, not something specific.
Okay.
And I'll echo that. I mean, I think the tides have raised for a lot of the service lines in our industry. I think that there's probably a large influx in the seat share, right? And that's what we perceive that as, is that's a really good seeding for a lot of the other services to come in the future years. Maybe it looks like kind of a generational, kind of a baby boomer kind of analogy, right? You got this large group of people who have been exposed to this side of the aviation on a seat share to lower cost, and that'll influence the next 5 years.
James, do you think it's seat sharing? What is your opinion on that? Do you think it's a good or a bad thing in this industry?
I think seat sharing has been an interesting phenomenon in the last couple of years. I think what Sergey's done with JetSmarter has been incredible in terms of the industry. I think it's elevated a lot of profile for that part of the business, and it's bringing people into private aviation. I don't see it necessarily as a long-term thing. I think that the trend is more really a shift from ownership to experience. As Michael said this morning, he was talking a lot about this, and I think we see that people are generally shifting out of ownership. People don't necessarily want the burdens of ownership. They don't have to own an asset, buy it, have the capital depreciation on it. You've got the risk on it, where you can go out and you can use a charter aircraft or a branded fleet or an operator that is going to give you the aircraft you want, where you want it, when you want it, and you have full flexibility. And I think that's the shift that we're seeing generally in the industry. And this whole trend towards on-demand, it's the modern way of consumption today. This is how people are consuming. We're seeing it with the Ubers and the Amazons and things like that. And I think this shift in private aviation is moving in that direction. And there is a ton of capacity in this industry that is underutilized right now. And there needs to be a way, and this is why I think JetSmarter has done a great thing, in terms of really opening our eyes up to that underutilized capacity. And so all of us on the panel here, we're in that on-demand space. And I think this is really the age of on-demand. That's where I think we're going to see things move to.
Thank you. Well, we spoke about inventory quite a bit this morning already. And we know that one of the issues in the industry is often owner approval. Now, seems to be a shift that there's more charter-friendly aircraft. Fabian, how does your company fit into that?
Well, we have a very charter-friendly client base. I know that's not the same for everybody, depending on what it is. For the most part, it's not by design. It's worked out that way. If you have an aircraft and you're looking for charter hours, we're kind of the place to go. I mean, we don't even have a single Part 91 aircraft management. I would love to have 20, but it seems that they come to us for the charter. In that case, our clients are very charter friendly, and they want us to help them offset their expenses throughout the year.
So what drives it is mainly the offset of cost for the owner, or are there any other?
Yeah, they just want to reduce their exposure. I have seen them fly a lot more recently than maybe they used to, which is a sign of a better economy, or they're making enough to offset that. So there's a pretty good balance there.
Okay. How about for you, Joe? How does it work for Lacy?
Well, we spend a fair amount of time educating people who are interested in, buying into an aircraft, and they don't quite parcel out the different buckets: capital, operating expenses, and so on. And so when we get to it, we're focused on the expertise of operating expenses. And so you're giving them just a piece of it, and you ask them to remind them, well, have you considered the acquisition price and depreciation, and what's your life cycle plan, that type of stuff. So there's a lot of customers that are coming to us and asking those questions. And, sometimes you have to redirect. And we're happy to do that because we don't want people to have a bad experience in private aviation.
Okay, great. Alistair, would you mind putting up the second question that I have for the audience? And then, Andrew, how does owner approval and inventory affect your business currently?
It affects it more on our on-demand side. So for directional aviation, I'm also responsible for 2 other portfolio brands, SkyJet and now Private Fly in the EU. And so speed to quote, speed to market, there's a hungry retail engine that's out there now with folks selling trips. So having rapid owner approval is important and getting a lot more sensitive. You see this generally in an upmarket, no question. I think technology solves a lot of this, to be honest with you. There's a lot of different ways that people do owner approval, including like smoke signals and things like that. So it's not the easiest thing sometimes, and it can prevent some good business from transacting. So you really do need, I think, a vehicle in which to do that. And so we've invested in technology to help this, and we'll continue to do so.
Okay, great. I can't see the answers since the screen is not working, but where are the new and future aircraft owners interested in? They're more interested in allowing charter, is what the audience says. Joe, what do you feel about this? Is this something that you see as well?
Yeah, I think that is the case. I think there's more people entering in with that as the plan, as part of their offset to be able to make sure that they can afford the airplane. I mean, there are a number of those people. And there's a solution for them. But I think that the owner approval process and getting people comfortable with charter, it is an education. It takes time. It takes 6 to 12 months for some aircraft owners to understand, well, this is how this works, and this actually, I don't care how you do it, I'd like it this way, right? So I don't think it's a yes or no. I think technology would be a great solution for that, but you have to build the expectation with the owner from the get-go that this is the relationship the aircraft operator has with your schedule. And we have 105 airplanes, 65 are on certificate, and of those 65, I mean, it's a full spectrum, right? Customers that want very little charter and some that want exclusive charter. And so we have to customize and be service-oriented in that way.
Okay, thank you. So we talked about industry trends this morning, consolidation being a big one. Do you see consolidation in the industry, Stephanie? And do you see the demand on the supply side?
Well, I think we're all seeing it every day, right? And there's, some of us have come from consolidation in general, right? So I think it will continue, and I don't necessarily think it's a bad thing. Sometimes when you consolidate or right size, it makes fiscal, financial sense for the business and sometimes for the industry as well. So I see it continuing, but let's face it, this is a business that is sexy, but it's low margin, and you have to know what you're doing. And so we see a lot of competitors come and go. This is the latest thing. And so those of us that have been in the game a long time, a lot of our companies have been, 5 years, 10 years. We've hit that mark where we have proven the fact that we know what we're doing. I think most of us tend to go slow and steady and just kind of watch. And so it's important to know what's going on in the industry and how to take advantage of certain things. But it's also important to know that there's certain things that work in this business and certain things that don't. And instead of chasing the next shiny thing, it's important to make sure that you're being fiscally responsible. Running an aircraft is expensive. So being mindful of all those things that's needed. So.
Thank you.
I would just quickly add, consolidation is actually a core part of our strategy. And it's can be a wonderful thing, to be honest with you, in some respects. But consolidation, there's also a subset to that, right? It's how valuable is your business? And I think there's an irrationality that still exists within it, or within our industry in regards to it. But for sure, there's going to be a lot of deal flow in this year and next year.
So the next question for you would be, obviously, congratulations with the latest acquisition last month, Private Fly.
Thank you.
What is this going to mean for your organization in the next couple months, years? How is it going to complement your current business?
Sure. So I think many folks here know Private Fly from this conference, actually. Mid-size, on-demand broker based in the EU, right outside London, big digital focus. So when you think about one of our brands, SkyJet, which 90% of the business is 48 contiguous United States or some transatlantic, and a digital underpinning where about a third of the transactions for SkyJet actually come through a digital platform as opposed to a person-to-person. It was a great compliment to think about a business that 80% of their business is in the EU or international. Also the same love of digital and really strong leadership, and that's a core piece of it. We are in the throes of thinking through going beyond the United States, and so one thing that I think resonates within Directional and OneSky outside of kind of that closed fleet or open fleet mentality is that hybrid circle in the middle, which is demand aggregation, which we all have experience with in some way, shape, or form. And so I think the idea of having an EU-based broker that can produce a series of client segments and that we can align against aircraft type in some respect or in some cases, as well as just using the general 135 market makes a lot of sense.
Absolutely.
I just want to add to that about the demand aggregation. I think we're seeing in the consolidation points, I think we're seeing both aggregation and consolidation both on demand and supply. You know, on the supply side, certainly with the emergence of some of the larger brokerage operations and jet card businesses, you know, in terms of Andrew's business with Sentient, JetSuite, with the Apollo Wheels Up Alliance, you know, our brokerage business today, we've grown it significantly. We're expanding about 20% per year. You know, we're probably going to do about $125 million this year in brokerage alone outside of the core fleet. So you have a group of companies, 4 or 5 companies, that are really starting to control a significant amount of demand and aggregating that. Then on the supply side, you're starting to get these dedicated fleets. And you know, the comment about the owner approval, I think, is important. We use a lot of operators where they don't have a lot of owner approval, or they're very flexible, they have very charter-friendly aircraft, and that's what we look for. So we have 124 operators that we work with, and we probably have about 20 that we use on a regular basis. And I think the supply side is moving towards that. You're seeing these groups like Fly Exclusive, TMC, charter-friendly fleets, whether it's your Fabian's types of business that are very charter-friendly, or the scaled operations like JetLinks. I think this is just a trend that we're going to start to see, and I think it will be exacerbated as people start to move out of core ownership.
Stephanie, anything to add? Oh, sorry, Joe.
It's okay. I just saw one of the questions that came up, and I thought I'd deferred it to Fabian on that one, and then I'll answer too. But what are the challenges of the charter management companies? You know, what are they dealing with growth challenges in the market, and what is that for Journey? And I'll comment too.
I don't know about a challenge specifically for me. What I'm most concerned about is we've seen an uptick in new aircraft owners, and I think Don from Jet Aviation mentioned that, you know, they come without having any knowledge of what it's like to own an aircraft, so we become the bearer of bad news, and we're there to bust their bubble and all of their expectations. So to me, that is the as far as a challenge is that client that's not aware versus our others that they know they've been aircraft owners for a long time. They know what it is. They can appreciate what we do for them and how we are there to reduce their costs, not make it a profitable business for them. To me, that's probably the biggest challenge on the client side. And as far as the management side, you know, the crewing is definitely an issue. I think we're all very concerned about that, especially, you know, we have 50 crew members, and I think all my crew members are great. If I needed 50 more, I'd be very worried. So that is definitely a concern for us.
Now, are the owners aware of any crew shortage, or do you feel like they have no clue?
I think they're a little bit behind. Obviously, we try to, you know, if it comes up in conversation, we say it, but they don't come to these types of forums and meetings, and, you know, they may read something, but at the end, aviation is not their core business. So I think they're a little bit behind. By the time we tell them, they're more shocked when we've seen it coming in the last couple of years.
So what do you do in your organization to be a step ahead of your crew shortage? Is there something specific that you do in your organization?
Yeah, we've actually, our fleet is predominantly based it comes out in and out of Teterboro. Something we've done that works is we've hired a lot of Midwestern type crew members. They're a little bit different. They don't live in New York. They don't have high taxation. We've been very successful with that. They have great attitudes, great people, very, you know, nice and calm, not your typical New York, LA. I've been doing, you know, they've been doing this for many years, and they want to get $500,000 to be a pilot. So that has worked a little bit for us, looking for crew members that live in different geographical regions, and they obviously relocate for when they come on. But that has worked well for us.
James, did you want to answer?
Yeah,
that
I mean,
as well?
I think the crewing is the biggest short-term sort of crisis we have in the business. I mean, if you go outside of the economy right now, crewing is a massive challenge, and we lost money. The last 2 months or 3 months, we lost money because we couldn't crew aircraft. And significant money, just because we had the demand, we just weren't able to supply as a crew. So we interviewed 1,000 crew a year. So we had applications of 1,000. We interviewed maybe 300. We hire about 30 to 50 per year. And we're doing a ton of things to get crew excited about the business and apply. We're doing a lot more digital marketing, much more outreach, we're much more flexible in terms. We're offering better benefits. The crews in our organization are the highest priority in the business. If the crews come in the offices, we stop everything that we're doing and we'll go and talk to them. We do monthly pilot calls where we answer every question. Very, very engaged with the crews and trying to keep crews. We offer incentives for anyone in the organization to refer pilots. It's a major thing for us right now. And I think one of the challenges for us as an industry is to think how we look forward to this point where you attract crews in this sort of 10 to 20 year period before we move to greater automation. And that's going to be a real challenge, I think, for the industry to do that.
And I know the same is true for us as well. The crew shortage, it kills me to have to turn down business or a trip or a request because we don't have enough crews to fly the aircraft. And so we're watching and monitoring the same thing as well, whether it's recruiting and attraction as well as retention and attrition. And so we're doing very similar things where it's the obvious. You need to make sure that they're competitively paid, but then what else can we do? And so we've actually teamed up our marketing folks and our HR people to be aggressive about it and be very creative out there. And let me just put this out there. If anybody knows any pilots, send them my way, okay?
You're probably in great company here.
A lot of competition.
Come see me. But yeah, just getting them engaged in the business as well, beyond the basics of how much money they make and what type of equipment they fly, but really getting them engaged into the everyday importance of the business and the value that they play in there as well. So we're getting really creative on how to recruit and attract and retain crews.
Thank you.
And the MBAA, there's a Business Aviation Management Committee, has been very proactive in trying to get in front of this for a lot of the flight departments that have come to them and said, hey, we have this issue, we're losing people. And so they've gone through and done a lot of statistical surveys to actually put numbers so that chief pilot or director of aviation can go to their HR or to their CFO and say, here's what it is. This is the difference. And yes, commercial is an alternative for our pilots. And once you lose them from this industry, it's very difficult to get them back. Don't do it, right? So, we've taken an initiative at our company to work very, very hard on that. But think about this. There was someone on the previous panel that mentioned it that, because of the turnover of crew, they decided to get out of aircraft ownership. I mean, maybe that's an outlier, but still, that's an extremism. But I still think it happens, and these frustrations are occurring with aircraft owners. So there's a cost to attrition, and it's not hard to come up with what that looks like. And so you can educate your customers pretty early on about, okay, well, so here's the differential between you paying that extra 20% more for your crew this year, and that it's really only 3 to 4% of your entire aircraft operating budget. So it's all relative, right? But it's the education that is really important, and it will help fix a lot of our pains.
Thank you. A little bit of a different topic, Andrew. Under the One Sky umbrella, you have a lot of different brands. You're currently allowed to book, I think under the SkyJet, you can book a charter. What technology do you think to have a book now charter industry as a whole?
I think James and Stephanie can answer this as well, but I'll give you my perspective. Pricing is probably your number one, tiger to tame. There's a lot of irrationality price-wise based on the dynamics that go through our industry. So utilizing a technology that can control or have an insight and perspective relative to a price point at any given time is probably the biggest. I think it's coupled, though, with two other things. Access to guaranteed supply in some way, shape, or form. So I think that's going to be a key perspective. I know the holy grail is to just sort of put a layer on top of what exists today, but I think there's a supply strategy that's going to help fuel that as well. Lastly, you're going to have a platform that can absorb some risk. And we tend to run around with risk in our industry in various ways, but I think if you're going to step out and you're going to launch something or put something out there with instant booking, with guaranteed pricing, anything like that, technology is only going to get you so far. You're going to have to learn all the permutations that come with doing that. And so it's going to take a combination of forces for it to really take off.
James.
I think that's a great answer. I think it's incredibly complicated. I think, you know, we operate a floating fleet, so we have consistency. We have fixed pricing, so we can plan ahead. But I think unless you have a floating fleet that is fully charter ready and charter available to do all of the complexities and permutations of pricing and one-ways and returns and things like that is extremely difficult. And there are all sorts of algorithms that you can develop, but there are so many things that you just can't, that are out of your control. You know, things change at the last minute. You have an AOG at the last minute. There's some operational issue that happens at the last minute. There's a weather issue at the last minute. These things are so difficult to put into some sort of a model. We use for our pricing now, we've been working with a machine learning algorithm for the last few years, which has been incredible for us. It's brought real value to our business. But we have the ability to do that because we have the scale and the fleet size to do it. And I think for the smaller operators to be able to do that is a complicated thing.
So for me, this is a very interesting point, because if you ask me the question as an operator, I would say the answer is probably no. However, for them, as a broker, it's different because the client can book something online, and in their mind, it was done a la Uber. However, then the technology portion of it is going to completely stop, and then the communication starts between them and us, the operator. And that link with the amount of detail related to the client. If you operate ultra-long-range aircraft like I do, there are so many details that cannot just be done on a click of a button for us. When we fly a client and we get a 27-page manual on how to deal with that client on the aircraft, and we have multiple conference calls with 4 assistants and their chef, how many inches a humidifier needs to be from the bed, which way the pillow needs to face of the aircraft, whether you're going forward or backwards, what needs to be placed on their seat, how the clothes need to be folded, and what notepads and type of pencil need to be on there no more than 3 feet from the client. There's no way you can capture that on an instant booking. Now, you could probably do it on a light jet, you could do it somewhere else, maybe you could key in some notes, but from their end retail to my end wholesale, there is so much communication that for me, I would say it's merely impossible. You can fib it, you can kind of make it appear that way, but there's going to be hundreds of minions running around behind the scenes to try to give the illusion of an automated process because it's so complicated for us.
Stephanie, how close is JetSuite to a complete one-click booking offering?
The one-click booking. So I actually agree. You know, it's funny. We are certainly we've had a nice deposit from one of our investors, and so we're spending a lot of it towards infrastructure and our people and things of that nature, in more aircraft, and certainly pay raises for crews and things of that nature. But one of the things that is most important to us, and I agree with you, is technology. We use it a different way. We use it more for making it better for the infrastructure of the business. But we're spending a lot of dollars to get our human connection back, and to make sure at the end of the day, yes, there's the millennials, and they are certainly much more savvy with technology than I am. Let's just say that. But we're dealing with high net worth individuals who money can buy them pretty much anything. And what we're finding is our clients want to be part of a community. Our clients want that high touch. Our clients want to be able to feel like we care about all those little intricate pieces. And so we're spending our dollars in a different way. Technology is important, but that's more for our own infrastructure. We are spending more dollars making sure that we are mindful of the human connection and making sure that we're not losing, people, in my opinion, you talked about my neuroscience, selling and behavior and communication, and at the end of the day, social media and technology, that's technology. Communication is communication. Human connection is human connection. And so for us, personally at JetSuite, what we're more focused in on is how do we elevate that client experience through human touch and connection and letting the people know that we really do care about them, and we really want to be that trusted advisor whether they're flying with us or not. So.
Do you think that that's a focus for the industry as a whole?
Sorry.
Do you think that's a focus, to focus on the back end rather than the front end for the industry as a whole? Do you think that that's where the focus should be?
Well, I can't answer for the industry as a whole, but I can answer for, the things that we're focused in on. And for us, what we find, and this is based on us polling our customers and doing a lot of surveys and then, of course, being responsive to the surveys. And what we're finding is that they want that human connection. They want to be able to call, Crystal, our account manager, and she knows everything about them. And so we're spending money to have someone like, Crystal, an account manager, actually go and visit customers. It's not, so, and you usually don't send your customer service people to go visit customers, but we do, because we want the customer to feel like this is an extension of their already important trusted advisor circle.
Okay, thank you. There is a great question here. The cost of operating an aircraft has gone up in recent years. Pilots now demanding more pay, but charter rates haven't gone up. When do rates go up and how?
The moment we all get together and decide we're going to raise the rates, and if I do it on the floor, I'll probably go to jail for price fixing. So there's no real way to do it. We kind of look at each other and wink when we see each other down NBAA in the hallways. It's like, But they do need to go up because, as someone once said to me, you are in the industry, in the market of the race to zero margin. And I thought it was very interesting when they told me that. And in looking at, this is exactly what's happening. I mean, we gave out $500,000 in raises to our crew, but our charter rate did not change. And people still ask for discounts. So all we're doing is really shrinking that margin. So, I mean, I think that's an excellent question. I do think it's a huge challenge for us. Our rates do go up when fuel go up because people can wrap their heads around that if they see, the fuel price going up. But there really hasn't been one with this pilot shortage, and I do think it's a conversation that all operators need to get together and have and say, look, I mean, this is equal to $300, $500 more an hour per aircraft, or we're going to wind up hiring not the best people or not the most qualified or the most experienced, or those guys with thousands and thousands of hours are going to go take a $300,000, $400,000 job for a Part 91 owner. And I think that's a huge risk that we need to be aware of as industry operators and really look at it. And I think the brokers know it. I think the jet card prices account for it. It's just a matter of shifting it now to the operators so they can run a healthy operation.
And I think that's important. And there's no shame in my game. I did raise our prices, and I am totally fine with that, because that whole elevated customer experience that I just talked about, that costs money. And when you have that intelligent conversation with your clients, and we have done a major price increase, they get it. They get it. I believe that when you present a value, people are willing to pay for it. We all are, right? And so, anyways, it's just a matter of for us, we were very focused in on who's our ideal client. We're not trying to be the jack of all trades, and every client's not for us. We're very mindful of the type of client that we want and the type of client that we're going after. And that will be, we don't want to be the cheapest in the space.
We actually had, raised prices last year. I'd be happy to raise prices. I will tell you what keeps prices depressed is this is a subsidized industry. So I know we're talking about it like everything's equal and everything's an apple to an apple, but the reality is you all have owners that are trying to subsidize their pro forma on an aircraft, and they're willing to do trips at certain costs. I'm not talking about the dedicated or closed fleets, but I'm talking about the managed aircraft. And so, to Fabian's point, until there's a perspective that's unified, you're going to see a lower price point at a wholesale level or a price point that's always going to exist. We even actually certify who we work with. We only work with a quarter of the operators that are out there, and we can still find the pricing that we need for our rates. So I'm not saying everybody run out here and raise your rates so that our business collapses, but I can tell you I have no problem raising rates to collect any form of a premium, just as Stephanie just said, in order to provide better service, better quality, and enriched products.
Great. Then the last question that I have for you, do you see that this industry is adapting to the shared economy in a fast enough pace? James?
It depends what you call the shared economy. If you call it shared economy seat sharing, or whether you call it shared as in asset sharing. I think shared economy in terms of sharing an asset, like the on-demand products and suite that we provide access to, that's growing. I mean, you're seeing it significantly. Fractional's grown, I think year on year is growing by sort of 2 to 4%. On-demand last year, Part 135 grew by about 9% last year. So you're definitely seeing a shift from people moving from ownership to charter type solutions or branded charter fleets. I think the seat sharing thing is still has some way to go personally. I mean, we do quite a lot of business with JetSmarter. They're a fantastic partner of ours. But I think the experience of that business growing and growing significantly has a fair way to go.
Okay, thank you. Anyone else want to answer the
Well,
question?
I mean, the shared economy is not new, right? So we're seeing that, even our founder in 1964 with the first Learjet in the West Coast, he was trying to sell the airplane, but everyone wanted to rent it, right? So there was a business for sharing an expensive asset from a very long time ago. It's happening with yachts. And now we're seeing it with Airbnb and Uber and all the others, where you're able to bring it into a different segment, right? And so that segment is new. I don't think it's really stealing or cannibalizing other businesses that we're operating in. I think it's just creating a new one. But I think from the standpoint of what's coming in the shared economy, I mean, I think it's beneficial and helpful, but it also focuses all of us as professional operators and companies to make our service better and to become more efficient to service the customer that wants more.
Okay, perfect. I want to open it up for the audience before this session ends. So are there any questions? I see a couple of hands. One. We'll take it.
Good morning. Interesting discussion. Charter is growing for the whole industry. My name's Leo Knappen of Bombardier. So I want to go off subject a little bit and talk about gray charter or legal charter. What are you folks, what do you consider, how difficult or how challenging is this subject both in Europe and in America? And let's talk just about these two markets, please. Nowhere else. And what are you folks doing to combat that?
Well, we know what's happening, and we had a couple conversations with the NATA who were here in strength at this conference, and it's under a highlight right now, and so we're actually very happy to see that kind of involvement from the NATA and the FAA to try and tighten up what is the FAA. Just because someone has gone through the effort of having a certificate doesn't necessarily mean they operate by the highest safety standards. You also see Wyvern is reinventing itself and coming out with an SMS kind of consulting service. So we're seeing an increase in response to what you're talking about.
I also think the consumers are more aware of it now. Before, I don't think they really knew what was Part 135 or what was illegal, or 134 and a half. I think in the last 3 years there's been a huge shift. I think the consumers do know a lot more. I think maybe the ones that are still doing that are first-time flyers or smaller jets, people that may not know. As far as for us, for Journey, I don't see it as a problem or a threat to, I mean, it's a problem obviously for the industry, but not necessarily to us, because like I said, our clients are up here, and then their clients would never want to do anything that's not of the highest safety standard. So there's zero effect to our business per se, but I do think it's detrimental to our industry. But I am happy to see the shift in a more informed consumer and the risks that doing a 134 and a half can possess to them.
Okay, perfect. I think we are out of time. I know it's the break, so thank you very much, panel.